You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time for a rockin' show. Yes, it's time for the Option Block, your favorite bi-weekly source for all things options related. Some wit, some wisdom, a whole bunch of UA, a whole bunch of your questions, sometimes some strategery, a whole bunch of other fun stuff. Mix it all together. You got the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And, of course, we got something fun for you hardcores who like to join us live. You can do so every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, M-I-X-L-R. So if you're saying to yourself, he's always talking about this live thing, but I've never checked it out, check it out. Go ahead, go for it. If you're around every Monday or Thursday, one or the other, you don't have to be both. We're not picky here. And you too, because you guys are always complaining, well, we don't want to wait for the podcast. We want to get it live in our ears. There you go. We created this stream just for you guys. If you follow us on social media, you've seen the link, grab it once, set it, bookmark it, do what you got to do with it, and then you're good to go. Don't have it baked into the mobile app quite yet. Maybe that's something for future iterations. Not quite really totally our app. We have to license it. There's a bunch of other stuff that goes into that. So otherwise, it'd be cool to have the live stream baked in there. Maybe for future iterations of mobile apps coming from the Options Insider, we can do all that. But for now, easiest place to grab it is on that Mixler link. And of course, you can follow us there if you are so inclined as well. And then you guys can get notified the second we go live, not just with this show, but Vol Views on Friday, TWIFO on Friday, Option Block on Thursday, as well as some of our interviews throughout the week. Maybe we'll do our Options Boot Camps live this week. Yes, you heard me, that show coming back as well. So a lot of fun stuff on the docket for you guys. And check it out live if you are so inclined. And of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We love it all. We do actually like to hear from you folks on occasion, once in a while, every week or two. All right. And joining me on the old program today, let's see, who do we have? Let's start off, I believe, once again, he is in the mobile office, to go British. He is Uncle Mike Tussaw, usually of scenic St. Charles, but I think today he is beaming in from the parking lot of the delicious Skippy's Zeros and Lemonade somewhere outside of St. Charles. Uncle Mike, what's up, and where are you today?
Well, I'm in parts unknown today. I can't disclose such things. I'm on secret missions, but the joy of mobile phones allows me to do what I need to do during the day and still make sure that I'm well connected with our beloved markets.
The joys of mobile technology. So yeah, he'll be beaming in. We'll see. Maybe he'll be moving around throughout the show, and we'll get different looks from different provinces out there in the countryside. We shall see. Meanwhile, though, I do believe we have a twofer coming up next, listeners. And the other, we are being joined by the titular pool house of Pool House Noise, where I do believe we are joined by both the Greasy Meatball as well as the tubster, the tubinator himself, Matt Tubby Benson. Do we have both gents there in the old pool house?
I am in the old pool house. I have not seen Mark yet, but I'm assuming he should be here any minute.
All right, so we'll have a double dose of the pool house coming forth with. Nice when people live close together like that. They can just hop into each other's pool houses, as you are wont to do out there in the suburbs. All right, with the team mostly assembled. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down, surprise, surprise, what indeed was trading today. And a few things were kind of lighting it up today. A lot of things. We'll get into all those in a couple of seconds. Of course, most of the major indices, after we've been talking for a while, Uncle Mike's, how often has he been hitting, teasing at his, never better time to sell. So we've been flirting with a lot of record highs of late. Today, taking a bit of a hiatus from that. Most of the major indices off ever so slightly out of the day, with the exception of the tech-heavy NASDAQ, S&P off about 1/3 of a percentage point. Dow, bit of a laggard today on the downside, which is good for you bulls out there, only off about a little less than 1/4 of a percent. And tech-heavy NASDAQ taking it on the chin, off over 1%, 1.2% to be precise. A lot of that also coming in with Apple and Amazon just taking a shellac, and Apple off over 1%. Amazon off nearly 2%. About 1.7% and change out there. So not a good day for all you out there who have been ringing the bell for tech to be the bellwether, pun intended. Baba actually taking it off about 5% out there. So depending on where you're looking out there in the tech sector, a lot of red on the old screen. So we mentioned before, I was surprised, maybe we'll get some of the voting for that later. I was surprised that NASDAQ didn't do better in our poll for where you're looking now for your index vol. Russell did all right. Dow did but everyone's still waiting for a VIX rebound. I guess they got that today, so maybe they were prescient there. But NASDAQ has been this interesting little source of vol surprises of late. And so I thought it would resonate a little bit more with our listeners. Apparently not so much. You're still out there looking to sling some Russell and a little bit of Dow, and a lot of you waiting for the old VIX to rebound. Speaking of VIX rebounding, it did just that. The cash up pretty high, got as high as 11, almost 11 and a quarter today. So remember, as we were saying on the VolView show, just last session, listeners, just on Friday, we were talking about single digits VIX back in the 9 handle. That dartboard, that laser precise prediction there that won the day on VolViews last week. But yeah, flirting with 11, not getting quite to the 12 handle today, but well north into the 11 handle today. And even perhaps more interesting is just the paper, just lighting it up out there in VIX land today. A given good day out in VIX land is a million and a half is really good. Almost 2.6 million contracts on the tape today. So a lot of things going on out there. Maybe we finally broke the feedback loop out there. A lot of things, about 3.2 to 1 calls over puts out there. So a lot catching our eye. Perhaps we'll start out in the old pool house. Mr. Tubbinator, in addition to enjoying your big bourbon fest from last week, what was catching your eye today, sir?
I literally walked in at 2:45.
I can tell you what caught his eye, and we were just talking about this while you were talking. So not everybody here listens to VolViews, but the big open interest contract in VIX has been from this huge risk reversal collar that went up in July, where the customer sold the October 12 puts, bought the October 15 calls, and sold 2 of the October 25 calls. Well, that customer closed the entire October position and rolled it to December. So in one trade, we did over 2 million contracts in VIX. I would have to go out and argue probably easily the biggest single VIX ticket in history.
Sure.
And currently, my understanding is we broke the VIX, the record for single day option volume in VIX today. I could be wrong. If not the record, definitely top 5. And that was all from this customer rolling. And I'll tell you, he had some good timing, and I liked the where he rolled to. October had been kind of really expensive relative to cash VIX, and then December, because for some reason we still price in seasonality. And I want your opinion on this when I'm done talking, Tubby. Over the last couple of years, December has not been a good contract to be short. Volatility has hit us in the first 15 days. There has been all kinds of movement. So I understand why this customer decided to move his entire long vol position to December and take the October off. He was only giving up 1.5 points in VIX futures spread and selling 100 VVIX and buying 70. So I like everything he did. And clearly it's ahead, but certainly some unique paper there in VIX. And sorry for the diatribe, but, Matt, what are your thoughts on that December, quote unquote, seasonality that we allegedly have?
Well, I mean, I think you've got to take, VIX is going to price in historical, no?
Yeah.
I mean, so over the last 10 years or so, yeah, December is generally a strong month.
Mm-hmm.
But we've had some activity the last couple of years.
Yeah, we've had the debt ceiling. Last year we got shaken around.
Well, and you've got the big interest rate hike potential in December. They're factoring in somewhere 50 or 60% right now.
Yeah.
I don't think they're going to do it, but that's obviously going to bring some.
That should bring some volatility. I mean,
and,
if a rate hike is 50-50, when was the last time we had a rate hike where the market was legitimately not overwhelmingly sure that it was going to happen one way or the other?
Right.
I don't know, Mark. Mike, when was the last time we saw anything like that?
It has been quite some time, and we look a lot at the FedWatch tool, particularly on our TWIFO program. And for a while, you're right, it was leaning heavily towards December. Then it seemed like in the last month or so, all of a sudden they kind of just pushed all that back. We were talking into August of next year, and until you saw over a 50-50 probability. Now there's a little bit of a pullback on that, but it has been a crazy dance out there in Fedland. Speaking of crazy dance, I'm glad you mentioned that record on VIX land, because that was kind of the first thing that leapt to mind when I saw this paper. I was like, if this isn't the record, then I'm sure that it's pretty darn close. In fact, I'm checking my inbox right now, because I'm sure if it was a record, SIBO would be hitting me up as we speak with the release saying a new record set for VIX options. Knowing our luck, they'll probably put it out instantly right after the show. Maybe we'll have to invoke one Mr. Russell Rhodes. He'll know. Maybe we'll reach out to him during the show and see if he knows, because he's the keeper of all the VIX historical data points. If it isn't a record, it's pretty darn close. I think it's somewhere in that 2.5, a little more level. I don't think VIX, to my knowledge, has never broken 3 million contracts, so it's got to be up there. But still, crazy time. It just goes to show too, even as big and as institutional as a product as VIX has. We said this before on Vol Views many times, that it's still a handful of whales. It's like the casino. A handful of whales come in and they just drive the whole ship. This guy doing the biggest ticket we've ever seen. It used to be the big whale was the old 1x2 or Roland. That one's still big, but this guy, 2 million contracts in a single ticket. I bet you Tubby is salivating over thinking about that on the old floor, putting up a ticket like that. But still, just crazy amount of volume. How one guy, and this guy, even when he wasn't trading, his one trade just dominated the open interest for over a month now out there. He's been pretty much number one with a bullet. His trade, the top 3 strikes every week out there in VIX. So he's just a huge size player. And clearly he's continuing the party. Speaking of the party, it's always a party when we bring on good old Uncle Mike, even if he is not beaming in from the Mecca that is St. Charles. Uncle Mike, a lot lighting up today, and otherwise it seemed like it was going to start off as a pretty quiet day, and then we had some stuff actually going off. So what caught your eye in today's activity, sir?
Well, a couple things. Apple, for example, continues to have its slide. I think just ever since last week when it had the news out, just kind of been going down. I think that's kind of been a leader to the downside in the tech world. Silver bounced off of the 16 level today, or SLV did anyway. So that's another thing with which it's catching my eye. We didn't hold 2,500 today, and I believe that's a key number. It's a round key number in the SPX, and this is one where, although it's not a cause of major concern, I still have plenty of bullish delta on the table. It's definitely one to where I'm raising an eyebrow, and the short-term cautious part of my investment strategy is definitely going into play at this time, just for that specific reason alone.
Yeah,
so,
Mike, I got a question for you. If I told you Apple was down 1.5%, Facebook was down 4%, Netflix was down 4%, Amazon down almost 2%, Google down almost 2%, and what would you have thought the and the Nasdaq? What would you have thought the S&P and the Dow would be down on the day?
A lot more than the few points that it was.
Right.
Sure.
How crazy?
Well, that adds to where what I believe is holding up the market. That's oil right now. Oil has definitely hit the bid a little bit today. I think that's kind of what's holding this up from going down a lot further. Financials are not down significantly by any means. They're just down a few pennies, and they've had a rally recently. But I think the start of all of this, not to say downturn, because I mean, I'm just looking at the S&P by itself, and it's only down, maybe like 15 points off of its all-time high. But I think what did start this was Apple coming down last week. Now, is that what is doing it? No. There's other things that Mark just mentioned, for example, but I think that was kind of the starter of this pullback, at least for the time being.
Yeah.
A lot of macro events and volatility.
If I hear one more person mention, oh, they're using the big tech names as an ATM to pay for other stuff, that was the cliche line on the networks today. Oh, the bank's an ATM machine. Oh, what are you? They're an ATM machine.
Well, if it's an ATM machine, it's taking my money.
Yeah.
Right. No kidding.
I'm hoping it returns
that, and then, there's a lot of things that we talk about in the macro level that could happen. I think, what was it this weekend? Some guy took a knee at a national anthem or something like that. I forget, something happened this weekend over that. So there's a lot of stuff that's going on, and there's a lot of reasons for the VIX to have come up a little bit like it has.
Speaking of VIX options, I did just put out the Sigma signal to Mr. Russell Rhodes, so we'll see if he can weigh in for us in a little bit on exactly where today's paper falls on the historical timeline that is VIX. But I'm of the feeling that it is. I think it might be the top today. It's pretty damn close. If it isn't the one, then unless there's some outlying data point that both myself and the meatball are both forgetting. That said, speaking of the VIX options, I joked about putting up that print, Tubby, but I got to imagine you might probably have some thoughts on this, because A, it is the biggest VIX print we've seen going up, biggest trade. B, you've put up some VIX paper in the past. What are your thoughts on that? Now, I was joking about the commissions, obviously, but what are your thoughts on the execution of something as just enormous as this?
I know I'd be dancing in the streets. I won't give out any names, but I did speak with the broker a couple of weeks ago, and he was giddy at the fact that his client might be rolling this position at some point. So to me, a trade like that is pretty much a quarter maker for somebody, if not half a year maker.
Yeah, I'm going to guess that broker is doing everything he can to make sure that client is pleased with the bill and pleased with the rate and everything, and that client is getting high priority from him. So, but I got to tell you, this is where the value of brokerage. I actually was talking to, and I'm going to take us on maybe a little bit of a side journey here, a sojourn, if you will. But I was talking to a reporter about the price improvement function that a lot of exchanges have, where these large institutions will trade things a penny below the offer or a penny above the bid. And, I was kind of explaining that's price improvement, but that's not the best. There's a difference between that and the best price. And, when you see an order like this go up and it gets crossed in the open market and it's made public, and it doesn't just go up all electronically in a flash that nobody ever sees, I can tell you that guy got the absolute best price that he was going to get on that entire order.
Right.
When you see, our famous friend 50 Cent is not getting the best price that he possibly could on that order almost systematically because it goes up in the PIP system. And we see that all the time. When you expose markets to the actual open marketplace, the best price is found. When you PIP things, the customer gets a better price than what's currently available.
Not always the case.
But not the price, and not always the case.
No, if I'm going to trade 50,000 options at a clip, and I'm customer A, and I've got firm B on the other side who says, I'll do that, the chance of somebody actually price improving you on 50,000 contracts is unlikely, because there's just not that many people that can take that down for that position.
In one print.
So the firm is actually probably not advantaging the customer by doing that. That's not always the case, but with orders of this kind of size, electronic systems are not of value where the open outcry public is.
Correct. And and to be fair, that 50 Cent guy, he may just say, "Get this done now," and they take the penny. That's about the only time the PIP system I think is best. When a guy says, "I want 50 grand, I want them now," and the firm says, "Okay, we'll do it," they're taking a risk. But most of the time, when the customer's like, there's a lot of times where the customer has a lot more time, and there probably is the other side. I can tell you, the 50-cent guy, I can think of 9 hedge funds that would like to take the other side of all of his paper.
Right, but if you think about the brokerage side of that, a penny,
myself included,
50,000.
Yeah,
that's 50 grand times 12 times a year, 600 grand out of that. We know it's a hedge, and we know it's a percentage hedge against a large position, but that's still a lot of money.
It is a lot of money.
Yeah, pricing proving a 50,000 lot is no joke, even for a penny. The people who can step up and do that, and the firms who can step up and do that, that's a serious commitment. I know you love your boy 50 Cent, Mr. Meatball, but yeah, this guy today, or perhaps gal, we should not assume, out there in VIX land, really just lighting up the tape. Just goes to show how big of a part these whales play in a handful of big trades will set the quarter, or as Tubby alluded to, for the broker, probably makes the last couple of quarters, if not their year. That's a huge trade. And speaking of huge trades, let's see what else we got on our tape today as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the chin-scratching paper that is lighting up our collective tapes over here at the Old Options Insider. You mentioned at the top of the show, tech taking it heavy. That includes everyone's favorite or perhaps least favorite tech name, depending on where you fall. It seems like a lot of these tech names people are pretty bipolar how they feel. They love them or they super hate them. Tesla certainly in the latter category, taking it on the chin today, off 1.7%. So not quite Baba bad, but up there with good old Amazon. Not quite Netflix. Netflix off nearly 5% today. So just a drubbing pretty much across the board out there in NASDAQ land. And we talk about drubbings out there in Tesla. That means it's time to check in on our favorite catastrophe life insurance, call them what you will, puts, these Jan 2019 50 puts, a nice 50 lot trading today. A total of 29,328 open on the old strike there. So still the number one with a bullet strike out there in Tesla land, which is crazy, pretty much just no matter how you break it down. Perhaps a little bit of a reverse ratio going up here. We've mentioned before, seems to be a bit of a tie between the Jan Pars and the Jan 50s, either 2019 Jan, by the way, with 151 of those 2019 100 puts going up today. Total of nearly 14,000, so almost 50% of the 50 puts out there. So it seems like there are some ratios going up out there, which maybe makes a little bit more sense than just naked gobbling up the 50s, but we know a ton of that is going up out there as well. So for all of you who are saying, maybe today was the day, people piling in to the crazy puts, actually a light day for those, but still OI pushing near record levels yet again out there on everyone's favorite head-scratching strike/trade. Let's move on to a name. This is a name we talked about before here on the old Odd Block. This is the EWJ. This is the iShares MSCI Japan ETF. Japan, that whole area being quite active for a variety of reasons of late. Not all of them things you probably want to be associated with, but still active stuff out there. This is a name that does nearly 5,000 contracts a day. Today doing about 55,000, so about 11x. Of that 55,328, 55,246 worth of puts. Only 82, whopping 82 calls going up in EWJ today. So no call love in EWJ. That works out to almost 674 to 1 puts over calls with all of you out there who didn't really feel like doing the math. I did it for you there. And let's go on to what we saw out here today. Pretty much of that 50,000 and change, the lion's share of it was pretty much a massive print of 50,000 of the D's 52 puts going up for 27 cents, right about mid-market, maybe slightly leaning towards the offer, but we know how these things go up. That doesn't really tell us a heck of a lot there. Opening print worth noting, only about 4,000 and change open on this strike. Looks like this might have gone up tied to stock. We'll have to dig in a little more to see if we can find the print on this bad boy. And that was pretty much the biggest trade of the day. Like we said, there were a few thousand, looks like about 4,200 of the NOVE expiring on the 3rd. 52 half puts also went up today, also an open interest, pretty much negligible. But the big print of the day was clearly the 50,000 lots of these 52 puts. And let's see, let's look back here at the year that has been. We talked about EWJ a few times here on the show in the past. It's been an interesting year. This thing has kind of been glued to this low 50 handle for the better part of the last year. It's been slowly, inexorably rallying. Rallying is probably even a little bit too aggressive of a term, inching its way north. Like I said, it was trading about a year ago right around 50 and change, and this year about 55. So it's not a bad year, up about nearly 10% or so. But it's been a long way to get there, certainly compared to some of the other names we've profiled out here this year. But if this is opening paper, as it does appear to be here, and if it is straight up put buying, then I have a friend here who seems perhaps like I got a little bit worried. If it is tied to stock, then it's an interesting, perhaps even more head-scratching trade. This is not a name that's known for delivering a lot of vol like you'd want on a trade like that. So pretty interesting either way. Let's toss it over to the folks in the pool house. Matt, I get to see you just salivating over there. All these 2 million lots, 50,000 lots all going up. You're probably just saying, man, I wish I had a piece of those. That said, what do you boys think about this 50,000 lot of puts and the notion of either hedging or getting long some vol here in EWJ at these levels?
This is kind of similar to the stock we had on Thursday. I can't remember which one that symbol actually, but it was the European.
Yeah.
Someone was buying some puts in December with a stock that had been up close to 30%. If you look at the chart here, it's only 5% this year, but if you go back to 2016, the stock's up almost 30-40%. So my guess is if someone's long on here, you're seeing some volatility in that region. Why not protect the position that's made you some money, and probably a rather large one?
Yeah, and Mark, I don't know what the Nikkei VIX is, but I can't imagine it's exceptionally high. You've had this huge amount of QE go into Japan. You've got U.S. turning the spigot off. You've got potential for a missile flying over your land. Low vol plus. I wouldn't be surprised if there's some Nikkei futures or something else attached to this. Now, one thing to be aware of with EWJ is that it is non-currency hedged. So there's a piece of currency that's associated with that, where if the Japanese currency gets stronger as the underlying rallies, you actually get a double dose of bull as opposed to the other way around. So, there's definitely some interesting facets of this trade. I think it's certainly there's definitely some sort of underlying tide there somewhere, either EWJ itself or maybe some sort of Nikkei futures play.
Yes, the good old Nikkei. We don't talk about the Nikkei VIX hardly ever. If you talk about an international VIX, it's usually the Indian flavor, the nifty VIX. I like that. I just like saying nifty VIX. But that said, the Nikkei VIX, about a 14, resounding 14, up to about 2.5% today for the you percent of a percent fans out there. And you're right. Maybe this is our friend, Mr. North Korea over there, Mr. Rocket Man, deciding, hey, I'm going to launch a few rockets over in North Korea. I'm going to pick up some puts in EWJ here just for the heck of it. It'd be the North Korean version of the Bin Laden puts out there as we stoke the tinfoil hat flames out there. Either way, I can't really fault this guy for doing this. This year, not so much. Last year from this year, it has been a decent run, and there is potentially some rocky waters out there ahead of time out there, and also potentially some vol. So our friend in North Korea, we'll see to that. So interesting stuff. Also pretty tight hedge too, locking it in at the 52 strikes. This guy's not really not giving up too much in the way of downside. So interesting stuff out there all around. I could certainly see an argument for potentially, certainly for the hedge. Let's move on here to a name we haven't talked about in a bit of a while. This is UPS, United Parcel Service, ticker symbol, of course. UPS closing today 118.22, up about 0.5% on the day. This is a name that does about 10,500 contracts, doing nearly 50,000 today. So pretty strong day, about 5x out there. 25, almost 25.5 to 1 calls over puts. And that's because pretty much the lion's share of that paper, once again in one big print. This time it was a vertical. It was a longer term vertical. Going out past Deese wasn't enough for this guy. He wanted to go all the way out to Jan, and it wasn't just Jan. So not just Jan 2018, that wasn't far enough. He said not even Jan 2019, that wasn't too long, that wasn't long-term enough for his purposes. Nope, all the way out to Jan 2020. This might be the first 2020 trade we profiled here on the old Odd Block today. So, or not today, definitely today, but certainly ever here on the old Odd Block. Don't go usually out this far on the old OB. And what we saw was the Jan 2020 140, 160 vertical going up 20,000 times. Looks like paper scooping up some offers here on the old 140 calls, doing those for 320, selling the 160s for 70 cents, doing the whole thing for a whopping 250. Like I said, the name closing today, a couple handles shy of 120. So this is a pretty optimistic outlook. Then again, he gave himself some time for this bad boy to come to fruition. He's got a few years here for this one to trade. So $2.50 for a 20 handle vertical, $20 out of the money. Here, a couple of years out here in UPS. We've certainly seen weirder trades here on the old Odd Block, that's for sure. Let's look back at the year that's been here, see what that shows us here in good old UPS. And this thing's had some peaks and it's had some valleys. It got as high as, at the high of the year, it's pretty much about at 120. So we're pretty much right around those levels right now before dipping back down in May, getting down, almost threatening to break the 100 level, getting down to about 102 and change on the downside. So it's been a bit of a turbulent ride since then, rallying all the way back up to these near 120 levels here in UPS. So our friend here perhaps deciding, you know what, the party's not done here in UPS, not by a long shot. I want some upside, but he's not doing it in OC or NOV or DEES. He's doing it in Jan of 2020. Interesting stuff, worthy of note for a bunch of levels. The size, the out of the money nature, and of course, the time frame. Always very interesting. Mr. Poolhouse Quad Duo there. What do you guys make of this pretty long-term, pretty optimistic upside vertical here in UPS?
I think looking at a stock that the last 5 years basically doubled, and I'm looking right now at a report of one of the Twitter followers, and Schaefer Research is pricing in about a 19% upside through Q1 of 18 anyway. You know, if you're going to buy a 20-point call spread that far out of the money, you're not going to do OC, and you're probably not going to do Jan. That kind of upside, you can let that grow. You're not going to risk a lot because it's not really going to disintegrate very, quickly. So it gives you some time to watch it go. It's going to tie into what I'm thinking the last part of our segment. So I'll loop back into that. But we saw a big trade like this in FedEx last week as well. So it could be someone just in the sector who's bullish across the board on this stuff.
Someone likes themselves some long-term upside. Mr. Meatball, same question for you. And I know you're not traditionally a huge fan of the leaps, let alone going this far out. What is a scenario where you would see yourself getting this long-term here in a name?
Yeah, I mean, it's definitely a play on we think the stock's going up. Now, the alternative is, what if I'm like the Amazon's going to shut down UPS and FedEx crowd, and I'm just setting myself up a hedge against being wrong, and I'm short the stock. I doubt that's what it is. But, I think it's UPS is going to fix themselves and not suck, or maybe get purchased by Amazon because Amazon likes their whole logistics-y thing. And, I'll be honest, the whole Amazon doing their own thing and seeing those rented trucks show up at your house and, all hours of the night, their delivery has been really unreliable. So, like, Mark, I know that your boy's a little old for this, but Valentino, we were using Amazon for their diaper delivery service. And this is diapers, right? I can drive to Walmart and get a 50-pack of diapers today. It's not a very hard thing to get access to. And Amazon, they'll say, oh yeah, it'll be there tonight, and next thing you know, they're not going to be there till Saturday. And so it's an issue. I think they have logistics problems. Oh, sorry. So I think they have logistics problems, and UPS would solve that.
Now, it would be interesting if that is the latest in the long string of acquisitions. I mean, whoever saw Whole Foods coming? So they have done some out of left field things before, even though they have been playing in the Amazon Prime / Fresh for a while space / now. So it did make some sense leaning into the Whole Foods. And they are so heavily on the logistics side of the fence. Gobbling up them, that might make this spread pay off a lot faster. We shall see. Or, of course, they do the flip side and they announce Amazon delivery services, in which case this spread maybe never pays off. So interesting stuff out there. Obviously, our friend here, if he is indeed leaning to the fences, and it seems like he is, then he's leaning towards a little bit more probably of the former than the latter. But we shall see. We got some time for this bad boy to play out over 2 years, to be precise. Let's get a little bit closer to home. If you like your verticals, we got another one for you to close out the old odd block here today. If you're saying to yourself, I like that other vertical, but what do you got in the put vertical category for me, Mark? Well, I got you. I got you covered here as I hit the mic. I'm so excited. We got the Dow Jones. Don't talk Dow a lot here. Good old DJX rearing its ugly head here on the old odd block. Can't remember the last time we talked about this one. This one, like I said, does about 3,300 contracts a day, so it's never been quite the world beater a lot of people wanted this one to be. Total today volume, though, about 27,000 and change, about 11 to 1 puts over calls, and that brings us up to our final name, our final victim here on the old odd block today. It is, once again, D's this time of the put vertical. It is the 220-200 put vertical going up 12,000 times with paper lifting offers are pretty close to it there on the old 220s. Blasting out the 200s, doing it for, looks again, $2.50, the magical rate here for your verticals. Get your verticals these days for $2.50. Go out 2 years, do it a little bit closer to home. Either way, $2.50, the rate for verticals out here. It started off the day a block of about 7,700 or so as the day went on. A total of 12,000 on both strikes. Both opening as well, pretty negligible open interest on both of these bad boys. So interesting stuff. Again, it's kind of hard to fault that this one is, as it appears on the surface here, a straight up near downside hedge. Kind of hard to fault this guy. All the major indices up pretty heavy. Today's little modest sell-off notwithstanding. And maybe our friend here decided, I want to sleep easy through the rest of 2017. I want to put on a put vertical. Let's look at the year that's been out here. Well, we know the year has been out here in the Dow. It's been pretty much straight up since November of last year. And our friend here liking this. Before I even toss to the pool house, boys, I'm going to mix it up. I'm going to bring on Uncle Mike from his mobile office because he's been known to like himself a good put spread, put vertical or two in his day. And he's also our resident bull here. Mr. Uncle Mike, what's your thoughts here on this D's put vertical? You like this, or would you construct it a little differently?
Yeah, I've done put verticals far out before when needed. It's one where I do like the idea of set it and forget it with a put vertical. But the caveat that I want to add to that is that if it does go to where you're concerned about it going, so let's say that you're just hedging a stock and you're using a put vertical as part of a hedge, you have to be ready to take action, because if it goes below the short put price, you can't be shy about rolling it down or taking profit on the put vertical or resetting it, whatever the case may be. Because if you're just going to do nothing with it, then you're trying to put a Band-Aid on a potential severed jugular. Now, if you're ultimately bullish and you're thinking, well, okay, I'm cool with this going below it, I'm just going to do a buy and hold strategy, and this $5 vertical that I made money on, well, that's icing on the cake. If that's where you're at, that's fine. But just make sure that you don't confuse, even though you are aware of what it is, don't just do the old mental game of saying, oh, it's a put vertical, I have protection, and then just forget about everything that you're doing. That's a mistake.
No, but you can set it and forget it, Uncle Mike. I don't know if you know that. That's why these trades are so great. You can just set it and forget it, like the old Ronco. If it works for infomercials, it certainly works for options trading. I apologize for almost running you off the road there with my surprise toss to you, but sometimes it's just too good to pass up. That said, let's head back to the pool house one last time here in the old odd block. We're in between adult beverages. Let's see what the Tubbinator and the Meatball think of this relatively straightforward vertical here in the Dow.
Well, I mean, your first question is, who uses Dow Jones to hedge?
All the savvy players, sir. All the big-time guys go Dow.
Yeah. I thought about it, and, there are funds that do some things based around like Dow theory. They use like the Dow rotational system, where they sell the best performing and then buy the underperforming every year, and it's a big rotation. That whole Dow theory: sell the 5 best performing and buy the 5 worst performing every year, and you'll get like an outperformance to the Dow Jones. And if you run a system that does that, then a overall DJX hedge would actually potentially be a good hedge against what you're trying to accomplish. That's the only reason I could think of using DJX options to hedge myself. I mean, this isn't even diamonds. This is DJX. That DJX used to trade a little more actively, but I think it's pretty much trade by appointment now.
Well, historically, isn't this the time of year where cyclicals tend to outperform that as well?
Yeah.
I mean, you see that going into the winter months. So maybe I'm long a whole bunch of stocks, cyclical stocks, but I'm just going to protect some of that here on the downside. I mean, it's not a massively huge trade. It's a decent size.
It's the dog. Excuse me. Jay Dingle, who's listening to the show, just explained that's called the dogs of the Dow play. It's not it is not Dow theory. It is the dogs of the Dow play.
Yeah, that would be the dogs. That's a popular one. I'm not sure if they do it. They set it up this early, but I've seen stranger things. I've always had a bit of a soft spot in my heart for any sort of Dow options. It was the first day. I think I said this on the show recently. The first day I walked on the floor of the CBOE, my first morning as a clerk, was the day they launched the Dow options. And it was a huge explosions and celebrities and confetti and rock. I was like, this is fantastic. This is going to be a huge hit product. And it never really lived up to that kickoff that it got. So I was always hoping, I always got a little soft spot in my heart for little Dow action. Unfortunately, not quite so much. Maybe today's vertical is the start of a Dawissance out there. We shall see. Meanwhile, let's keep on rolling into it's Monday. It's time for you guys to take the reins with a little bit of your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the man said, this is the portion of the show where you guys take the reins and you guys fire off your opinions on a variety of things, including you guys have a lot of opinions on our various polls and questions, including last week's one. Really seemed to strike a nerve with you guys in the EFX stuff. Of course, this has been a big story with the Equifax potentially insider trading as a result of their whole data mining breach. We singled out one executive in particular who cashed out around $600,000. So again, you're not talking $100 million, but still a substantial amount. He saved himself, if he was indeed well-timed, then he saved himself about 35% on that. EFX was off about 35% when we put that poll up. We asked you guys, what do you think? You get lucky, he's a genius, he acted on inside info, or you're too busy freezing your account, and most of you had no pity for this guy. 75% saying he acted on inside info, 9% saying he got lucky, and a tie for 8% with he's a genius and I'm too busy freezing my account. You guys had a lot of thoughts on this as well. We'll just filter a few of them out. Jedi Markus saying it sounds easy enough for a jury to understand it then. This guy is #guilty. Sir Martin says it depends on which breach you're talking about. I guess there's one in March or the one which was discovered in July. I didn't realize there were two. I guess there were. He trying to say they definitely knew if the first one was in March and they sold in August, they knew something was amiss. I don't think it matters really because they didn't disclose it publicly until September. So either way, if it was one breach or the other or both, it still was material non-public info either way. So seems like it would not pass the smell test. Yellow Buddha, I like that handle. Yellow Buddha says what they did was so illegal it makes Pablo Escobar look like an amateur. So there you go. Just a few of the many comments we got on that one. You guys have your thoughts on that. Let's move on to this week's question, which is, hey, we talk about this a lot on vol views. Thought we'd bring it up here too as well. Your VIX. You guys like your VIX as evidenced by today. Well, at least one person liked the VIX today, but usually you guys really like your VIX. And it comes in so many flavors. Let's just forget about plain old vanilla VIX options and VIX futures. Forget about that. It's old hat. It's got a legion of ETPs out there that you guys can choose from. So go ahead, pick your poison. What is your favorite flavor? What is your favorite way to trade yourself some VIX? And we know we can't put them all in. We can only pick 4. So we know we left out your favorite. So right back in if you have your own thoughts. You always have done so. We did make one caveat. There will be no TVIX in this poll. I put the kibosh on TVIX, so don't write in TVIX if you want to. So we gave you four of your big choices. We gave you VXX, UVXY, XIV, and SVXY. So let's have the Pool House boys weigh in, and then I'll give us our thoughts. Let's start with Mr. Meatball. I think I have a feeling which of these may be your favorite. Even though I think we probably left some of yours off the list that you like. So yeah, first off, maybe we'll start there. What is your favorite, and then what do you think is winning our poll?
Well, it kind of depends what I'm trying to do. If I'm setting up hedges or things like that, then generally I like VIX. If I just want to play contango, then UVXY. But all in all, I think that even though it's complicated, VIX for somebody that wants to spend a couple of minutes really learning, VIX is the easiest to actually trade and actually do what you're trying to accomplish, long or short. The most cut and dry is VIX, and so that would be my pick. I know you're unshocked.
You think that's winning the poll?
Sorry.
You think that's winning the poll too?
I do not. I'm going to say that VXX is.
Probably a safe bet. And before Tubby finishes moving the beer keg, whatever he's doing there in the background there, Mr. Tubinator, what is your flavor of choice? Or if it's not on the list, what do you like? And then what do you think is winning our poll?
It's not on the list because I don't trade a whole lot of this. I trade some VIX here and there, some butterflies and such, but not my spot of expertise. So I'm going to leave that to the guys who know what they're talking about in the product.
A good bet. By the way, I apologize for the audio this week. So we got mobile offices, we got pool house things smashing. Everything is just a lot of background noise, but tune in. It's worth it to listen to the some of the nuggets here. You got to ferret them out amongst the noise here. Mr. Let's wrap it up here with Mr. I almost called you the Rock Lobster. That would not be the case. Mr. Uncle Mike, what are you feeling here in terms of your favorite? I know you had a little bit of a VIX-assance of your own over about a month or two ago now, where you've kind of just awakened to the beauty that is VIX. So what is your flavor? What is your poison out there? And then what do you think our audience is picking?
Well, my flavor is SPY, meaning I'll either sell more premium or buy more premium, dependent upon what the volatility levels are. So since I don't really dabble in the VIX all that much, I really don't trade it too much, I'm going to yield it to the resident expert who's participating in Pool House Rock today. Thought I'd throw in an 80s reference. And go along with anything Sebastian says with this, although this could be dangerous at times. But in this case, I think it's wise to go along with someone who, pretty much earns his living doing such a thing.
That's a dangerous road to hoe, sir. So I will shut you down before you dig yourself a deeper hole. Right now, I will say this: our audience is surprisingly evenly split. We've got a slight lead for SVXY. Again, we just posted this right before the show started, so we got a whole week to weigh in on this one. That's only been up for about an hour or so. We got into tie, 27% SVXY, 26% each for VXX and UVXY, and 21% for XIV. I got a feeling those percentages will move around quite a bit throughout the week. You guys already chiming in with your thoughts. Aegis Thus 11 says, I like to sell in the money UVXY calls. Get assigned, and then I'm set for life. Interesting. But then UVXY Trader, I wonder what he likes, what he votes for. He says he disagrees with that and says getting assigned short shares in UVXY only lasts a day. He uses TD. He says they almost always require me to cover by end of day, so you can't really get, he says you can't get size short longer than a day out there on TD. Upward momentum. He writes in UV. Why do you have to write in UVXY? You can vote for it in the poll. So I guess he just really likes UVXY. So I guess from these comments here, UVXY may be set to be our winner. It just changed again. Now SVXY up to 30%. Keep voting. You guys live certainly can do so. You guys after the fact can do so as well. It'll be up all week. So this one you won't miss. Don't worry. All right. Let's see what else we got here. Let's go to, let's follow up actually something we talked about last week. We had a listener write in, Salman Azhar. I believe I'm pronouncing that correctly. He said he was talking about selling out of the money debit diagonals around earnings, and we kind of gave our thoughts on that, but we didn't have a lot of specifics on it. He followed up with some more specifics. He said, I usually sell the current week at about a minus 0.25 delta and then a 75 delta. but a little more in the money on both sides. So he says it's about 1 to 2 months now. I thought he was using weeklies. He says it's out about 1 to 2 months. That's kind of interesting that he's doing earnings in that sense. Maybe you need a little bit even more details on that, because that's completely different than what I thought he was doing. But he has another question, actually. I'll let him sneak in another question, because why not? Because he said he likes Uncle Mike on the last show, so I guess there's no accounting for taste, so we'll let him sneak in another question. He does have an interesting one. I don't think we've ever actually been asked before. He says, any recommendations on a trading platform for mock trading options specifically? That's a good question. I've never said. We get paper trading all the time. There's a million of those. A mock trading on, because you need a couple of things. Obviously, you need some sort, these are set up to go already on the floor of the CBOE. It's probably the easiest place to do it because it's all set up. The pit's there. They have the underlying ready to go, and they have the options moving accordingly, which is what you want. They have a book. They have all that kind of good stuff. I think Mark's going to do that at his Pro Trader Summit later this week on the floor, maybe with Tubby. So that's obviously the best place to do it. If you can't come to Chicago, then outside of that, that's a good question. I'll have to look into that. I don't know, Tubby, you're a resident former floor broker guy here. Any thoughts on if someone wants to do mock trading for themselves or some friends, or maybe I think this guy has an options club. He wants to get active in mock trading. What can they do?
I believe Thinkorswim has a paper money account.
Yeah, they do, and it's actually not bad. It tracks things. It's in a 15-minute delay, but that's not terrible. I think Options House has a decent paper trader as well.
A lot of them do.
Yeah,
Thinkorswim's what I use.
They're all great for testing stuff. And
well, I don't think he means. I think you guys are thinking paper trading. That's what I first thought when I read this too. But he actually means have a bunch of people like get together in a room and do like a mock trading session, something that could drive an underlying, generate some theos off of that for the options. Have maybe people tend to be brokers. I don't know. He didn't elaborate what he needs, but anything along those lines you can think of, Tubby, that will try to replicate the mock trading experience in that sense.
I think Tony Saliba may have something like this.
Mm-hmm.
You may want to chat with him. I think he's got a virtual trading room. I don't know a lot about it. I know you know Tony. I'm going to follow up with him, but I think they're doing something like that over there.
Not a bad guess. He has done a lot of floor-based stuff. Next time Tony's in the studio, I'll have to ask. And that's actually a good question here, Solomon. That's you get a gold star for one we've never been asked before. We get paper trading all the time, but mock trading, not so much. Kind of a bit of a skill set that's going away a little bit with the dearth of floor trading opportunities out there. But I guess in the meantime, you can always come to Chicago for Mark's thing next week. They'll be doing it right there on the floor of the CBOE, so you can see it live and in person. Let's see here. We got time we can do another quick one or two here. Let's see. Your buddy Contango Trader Mark says it's easier to make money with VXX when puts when is low. I think he means when VIX is low. So there you go. He likes VXX puts. A vote for VXX, I guess, there in our poll. Molin says, why don't more options brokers offer trade recommendation ideas and trade recommendation engines like Idea Hub? A lot of people would like it and would trade more. Idea Hub, of course, very famously the brainchild, the baby of our former friend on the show here, the Viceroy, Mr. Alex Jacobson, who worked a lot to create that of course, deriving a lot of effectively trade ideas, like the name implies. So it's good opportunities for premium harvesting. I think that was their biggest driver there, but also places to get cheap hedges and things like that. It was a cool idea. I think, quite frankly, Mullen, one of the reasons why that hasn't taken off and other people haven't ripped it off is because almost immediately after OX Schwab launched that, the SEC kind of cracked down on them a bit because it's a little bit of a conflict of interest for brokers to be recommending trades. They sorted it out at the end of the day and they got it set up so the Idea Hub can still run and they can still obviously function as a broker. But I think there was a little bit of pressure from the SEC. Maybe some of the other brokers saw that and said, I don't know if I want to deal with that. So that could have been part of the reason why we haven't seen this. Other than that, any other thoughts? Why don't more brokers do this? Idea generation is kind of the name of the game at the end of the day. I don't know, Mr. Uncle Mike, any thoughts?
Many thoughts on it. I think that it's, quite frankly, right or wrong, it is a witch hunt out there right now in the compliance world. Yeah. And if you don't have all your T's crossed and I's dotted and every possible little thing. There is, I always view it at RCM. I'm probably one of the more frequent option guys there. And so whenever we get audited and just a routine audit, I always view myself as the fat guy on the plane, meaning if the plane has too much weight on it, I'm the first one that's going to go. Now, that actually has not been the case, but I've not been personally audited in the last few years, so maybe I'm jinxing myself by saying this, but my point is that there is, if the word annuity or the word derivative is in your practice, there is an X on your chest from the SEC and the regulating bodies.
Yeah, I agree. I think that's one of the reasons why a niche like Option Pit exists is that, where we do not handle your, there, as soon as you start domiciling assets, the level of you better watch out from the SEC goes up 100 million%. And, at Option Pit, we don't do recommendations, but we do come up with trade ideas that we personally like, and the stuff that I like, stuff that I'll trade. And whether other people follow along with me or not, I have no idea, which is what I like. As the issue that you run into when you're a brokerage is if you put something out in an idea hub or a think thought or, for whatever Thinkorswim calls theirs, is, they could theoretically look in their own customers' accounts and see who's tracking them and then check for suitability. And that is not that would scare the bananas out of me if I was running a brokerage firm. So I'll tell you, I don't know. I make it a point not to know who my customers are. That's not true. I mean, I make it a point to know who my customers are. I make it a point not to know much about my customers' financials and what their trading are. And so, that is why we're able to come up with ideas and throw them out there and say, hey, this is something I like, and maybe I'll trade it for myself or one of the partners or like our group account. The group account being me and my partner, but not actually see what the customers are trading. That's the issue. It really is.
My two thoughts on this would be, one, you always have to say, I am long. I have a position in this name, that long or short, whatever. But secondly, I think, from what I've learned on Mark's site over the years, is some of these trade ideas, while they're trade ideas, they're more trading ideas of like the spread or the butterfly and why that particularly works in this particular name type of thing, as opposed to saying, I love Apple, I love Amazon,
Yeah, sell this, buy this.
Learn this strategy and maybe use it in other stocks.
Arming yourself to arm yourself. That's what we like to do here at the Old Options. That's the whole premise behind this show. So good stuff. Yeah, compliance at the end of the day. The long arm of the compliance. Maybe one day we'll have we'll have the Viceroy back on, and he could detail the saga that was the Idea Hub and the ramifications of it. But for now, we got to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
It's neck and neck. VXX now taking the lead. 29%. Oh, the ebb and flow. That is VIX choices, I'm sure. These numbers will change dramatically as the week unfolds. Speaking of the weeks unfolding, a lot of things are happening. Or maybe some things at least are happening this week outside of Rocket Man and crazy football drama and everything else. Let's start with you, Mr. Uncle Mike. What are you watching the rest of this week, sir? At least till we can gather here together again on Thursday.
Very simple. 2,500, North Korea, hurricanes, and the president's Twitter account.
There you go. Very concise. It's like we've done this once or twice before. Mr. Tubinator, same question for you, sir.
I am watching the Trump trade. I can't get on board yet with this is probably where the market's going to start collapsing. I think we probably rally back to highs here shortly. FANG will take a little bit of a hit. I like cyclicals. I love retailers. I just got back from Louisville, and they're building a huge Duluth Trading Company store right in the heart of downtown. I think you're going to start seeing retailers improve. I think that's why you're seeing FedEx and UPS on people's radars. But don't forget, in this season, as we go into the holiday season, Apple's going to do well with their phones. Amazon's obviously going to do well. So I love these chances of buying some of these stocks down here, but I'm also going to be on retail.
Interestingly, Matt's wearing his buck naked underwear right now, and that's it. It's a little weird in the pool house, I'll be honest.
But I'm stretchy.
All right, on that terrifying note, we're going to bring it to a close here on the old option block. But before we go, one last time around the old horn. Let's start off with Mr. Meatball. Mr. Meatball, I got a feeling he's got a cool event. Maybe Mr. Salmon, if he's going to be in Chicago, could attend, do some mock trading, as well as anyone else out there who's always wanted to say, how does this stuff actually work? How do these trades actually go up? How does the mock trading happen? How do these things actually trade? This might be a good place for you to come check it out. The Option Pit Pro Traders Seminar coming up this week. Mr. Meatball, give us the details, sir.
Yeah, it's going to be great. Wednesday night, we're doing a mock trading session. Matt and I are going to help lead it. And then we're going to go out and have drinks afterwards. So you get to experience the pool house. And then on Thursday, I believe Mike, I know Mark is going to be there, Matt and I believe Mike is going to try and make it in. And we're going to do a live Option Block podcast. You can ask us questions straight up live. We're going to have a great session. I'm going to be doing stuff on trading directionally in a low vol environment. Russell's coming in from Vol Views talking weekly VIX options. Got Todd Gordon doing some fun things. Bunch of other people. It's going to be really pretty great. I'm doing a live trading demo Thursday and Friday. So if you want to see what I do in Option Live on a daily basis, you're going to get an opportunity to check out, how I find stuff to buy and sell. My guess is that I'm going to pay for my summit ticket trading on Thursday and Friday morning. That is my plan.
There you go. He charges himself to attend his own event. Check it out, listeners. OptionPit.com, the place to find it. We've tweeted out the link ourselves. The link will be in our show notes. And in fact, they have a deal going right now. If you come right now, you can bring a friend. So if you have a friend who's a big fan of the Tubinator, wants to meet him in person, there you go. Have at it, and you can enjoy good stuff there. And Mr. Uncle Mike, last but not least, sir, I know we'll see Tubby at the event, so we know what he's working on. But Mr. Uncle Mike, what's cooking for you, sir?
Hey, if you're looking for a financial advisor who is someone who can hedge a large single stock position and does that, I am your guy. I'm someone to give a call to. And also, if you are looking for possibly saving money on commissions, if you're a self-directed trader and you want to work through the RCM umbrella through one of our brokers that we use, Interactive Brokers or TD Ameritrader, just to name a couple, feel free to give me a call and we'll see if we can save you some money and possibly give you some advice. And last but not least, the best part of it all, I will give away a $100 gift card to the Option Pit if you become a client of mine. And on top of that, with the Bring a Friend, have your friend become a client. If you work this right, you can actually get paid money to go to Mark's event. How can you go wrong?
Wow, that's a good deal. Hit him up, M. Tucson RCM FS listeners, to learn. Yeah, you can put that money towards the event. Why not? Go for it. Go crazy. Go big or go home. Or perhaps in this case, just go to the event, as they like to say. Maybe we'll see you guys there on Thursday, because the next episode of the show will be coming out. If you're not going to be in Chicago, I'm not sure if you're going to be able to chance to get the whole thing. Depends on the connectivity we have over there at the SIBO. If we'll be able to stream it live, maybe have to just get it in podcast form. We'll see what we can do. Maybe we can work in a little live Mixler action or maybe a little Periscope or something like that. We'll see what we can do. Again, it's all up to the connectivity over there on the SIBO. Sometimes a dicey prospect. But we'll see if we can get it out to you guys. But in the meantime, make it out there. Come see us. It'll be fun. And hopefully we'll see you there on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.